China's stock bull run falters with earnings set to underwhelm. February 16, 2026. A weakening earnings outlook is clouding prospects for Chinese equities, raising doubts that Lunar New Year spending will be enough to revive the market rally. Corporate profit pre-announcements point to a sharp deterioration in the fourth quarter of 2025, according to Morgan Stanley. At the same time, recent economic data highlight soft consumer demand as some government stimulus measures are scaled back, Nomura Holdings said. Investors are increasingly concerned that the 9-day holiday will fail to provide its usual lift to corporate earnings as economic uncertainty weighs on spending. Sentiment on Chinese stocks is going through a weak patch, said Vaisern Ling of Union Bancaire Privée in Singapore, citing investor caution ahead of the long holiday, a lack of new catalysts, heightened regulatory scrutiny and intense competition. The MSCI China Index has risen just 0.8% this year, lagging the MSCI All-World Index's 2.8% gain. Elsewhere in Asia, South Korea's benchmark has surged 31% and Taiwan's has climbed 16%, underscoring China's relative underperformance. Earnings season is shaping up as a disappointment. Fourth quarter pre-announcements from over 2,000 mainland A-share firms show negative alerts exceeding positives by 14.8%. Compared with a net negative 4.8% in the second quarter, Morgan Stanley said. Smaller companies, especially in real estate and consumer sectors, have been hardest hit. Slowing growth is a key drag. China's economy expanded 4.5% in the fourth quarter from a year earlier, the weakest pace since reopening from COVID lockdowns in late 2022. Producer prices fell 1.4% in January, extending a deflationary trend, while purchasing managers' indexes signaled an unexpected slowdown. Nomura economist Lu Ting said weak readings in both manufacturing and services PMIs point to insufficient demand, with consumption facing headwinds from reduced trade-in stimulus programs. Regulatory tightening is also weighing on sentiment. Authorities recently tightened margin financing rules to curb speculative trading and limit boom and bust risks. At the same time, earnings trends vary sharply across sectors. Metal miners are benefiting from higher prices, while companies linked to artificial intelligence and firms supported by government efforts to curb price wars are faring better. CMOC Group expects full-year net income to rise about 50%, and software maker iFlyTech forecasts gains of 40% to 70%. By contrast, electric vehicle makers BYD and Great Wall Motors saw shares fall after weak January sales. Overall, A-share earnings are projected to grow about 6.5% in 2025, following a 3% decline in 2024, according to China International Capital Corporation. Analysts caution that much of the rebound reflects policy support in cyclical factors rather than a structural improvement in fundamentals. By Bloomberg, story by Bloomberg News, February 16, 2026.